Today's Wednesday, June 12th, and the stock market has been trading for a little over 2 hours now. But this is a trade review on a position I took earlier this morning involving U.S. natural gas ETF, ticker symbol UNG. And as of the time of this recording, the ETF is quoted at $20.99. And since trading started this morning, the ETF is down about 54 cents. So this is a chart layout at the daily time frame. Each of these candlesticks represents a day's worth of trading. This is the current candlestick for today. The red vertical dash lines are markers for expiration Friday for monthly option contracts. And the most recent expiration was back on May 17th. The upcoming expiration is June 21st, which is next Friday. And the one beyond that is July 19th. Now, based on this chart assessment, just looking left, going as far back as end of last year, I've marked up two reasonable support and resistance levels relative to the current spot price of the ETF. Now, why I'm calling this out, these two price levels, is that this appears to be a double top formation. So here we have the first top or retest of the upper support resistance level of $21.47. And this was back on May 23rd. And the past 2 days, price has been trying to break back above it or retest to break above it, and appears now to be in the process of getting rejected again. So this could be considered as a second top that has yet to be completed. It's still in progress. It could possibly try and break above this several times. But heading into the June 21st expiration date, I'm speculating that this rejection will ultimately lead to a double top formation, leading to price to come down, possibly retesting the next support and resistance level sitting at $17.92. And the double top formation, again, just looking left, we can see here that as price was coming down early December, there were 2 or 3 days where price acted as either support or was acting as resistance. And then here when price fell below, it found support, bounced off this price level, and then just came back up and has faded back to the downside. And then when price fell below it, price was rejected over here back in early March. And then subsequently, the second attempt was successful and price broke above it and then found support again when price was rejected. So again, this is all just from my perspective, but overall, this pattern could be the start of a double top formation. And again, switching over to the education tab. So here's a description of what the double top is, but here it says, being clearly reversal patterns, double tops appear in the uptrend and reverse it to the downside, right? And here's a simple diagram of that. So the top horizontal is the upper support resistance level. The bottom horizontal line is that second support resistance level. And then we have that first peak. And then now this second peak is in process. So again, heading into expiration Friday for June 21st, I'm speculating that momentum to the downside could eventually start picking up and pushing price lower. So based on this description and definition of what a double top is, I took a short position. Now, I didn't short the actual common shares. I shorted via option contracts. So switching over to the trade tab, under the option chain section, there's a flag position pegged to the July 12th expiration date, 30 days away from today. So this is literally a week before the July 19th monthly expiration. So these option contracts are weekly contracts. So all the yellow fonts are weeklies and the gray fonts are monthly expiration. And the specifics to my option contracts are down here in the bottom left corner. This is involving the $18.50 strike price. So relative to the current spot price of $20.95, I'm speculating at least a $2 move to the downside, $2.50 move to the downside. And as a buyer of option contracts and bearish, I'm on the put side. Now, I only picked up 5 contracts. I thought I'd mitigate the risk because again, right now, short term perspective, this is inside an uptrend, right? So price could eventually break above it and retest this upper high from back in January, which is $27. So again, I want to participate on a potential pullback, but I didn't want to overload on too many contracts. So I thought five was an ideal number just to participate in this short-term swing trade. My entry price is quoted at 46 cents. And so far, again, it's still early, but the premium has gone up by a penny. So the premium is quoted at 47 cents. And the P&L, or the profit and loss side of the ledger, is reflecting a positive balance of now $7. So it's still early, so it's just ranging right now. So one last thing I need to clarify is that right here for each of these options, there's a 100. Now the 100 represents the number of shares each option contract is holding. So I need to multiply the option premium by 100. So opening up the calculator, my entry price is quoted at 46 cents times 100 shares per option contract. So one option is equal to $46. I picked up 5 contracts, not including commission. I'm risking $230 over the next 30 days for this potential move to the downside. So that is the current status of this trade. So now it's starting to pick up a little bit more. The P&L is up $12, but it's still early, considering there's 30 days remaining. So what I'll do is I will pause it here for now, and I'll pick it up when something more significant does occur. So quick update. Today is Tuesday, July 2nd. So it appears the double top pattern that I had marked up is working out as price has fallen below this local support level of $17.92. This white line is just a visual markup as to where I took the short position via the option contracts. I entered back on June 12th, and at the time, UNG was quoted at $21.02. So again, this trade has exceeded my expectations for this double top pattern. Now that price is at this point right here, I am starting to look at possible closing of this trade, considering that just looking left, there's this whole consolidation phase where price essentially just spent a majority of its time going sideways. Of course, price did come down, hitting a low of $13.87, but because trading option contracts, whenever price goes sideways, it's a detriment. So the area I'm concerned about is this area right here. And we can see if I extend this out a little further, either price may get hung up here at the upper half of this range, or we might see, hopefully, a gap to the downside, pushing price even lower. But considering there's only a few days remaining until the July 12th expiration date, I don't want to get too greedy and holding out for a few more dollars. And what I'm referring to is that if I switch over to the trade tab, right down here at the bottom right, the profit and loss side of the ledger is reflecting a positive balance of $1,079, and $300 of that was just from today's drop. And right now, the option premium is quoted at $2.63. I'm just going to round it up to 63 cents, or $263 per option contract, where I entered at $46 per contract. So what I'll do is I'll switch over to the option chart specific to my trade. So again, contrary to the chart before, this is the option chart specific to my trade. So right here by the ticker, this is involving UNG. This has the July 12th expiration date and the strike price of $18.50. And it's on the put side. And the last quoted price for the option premium is $2.50. However, if I open up Active Trader, the position is actually right here. This is the closing price of $2.63. which is at $1,079. So now that price is here. And again, my concern is that consolidation area. We might see a bounce. And because, again, there's only 10 days remaining, I don't want to press my luck. So I'm looking to close this trade out at the option premium of $2.71, which is equal to a net profit of $1,121.70. So I'm going to go ahead and place an order to close it out. Even though the stock market is closed, I should be able to place my stop order right here at $2.71. So there's my stop order sitting right there at $2.71. So if price just happens to break above 271, then this should fill my order, closing my trade out at 1121 net profit. So that's it for now. I will pause it again, and I'll pick it up if or when this trade is closed, or until something more significant does occur. So another update. Today is Friday, July 5th, and the stock market is well into the afternoon session. So there's about 3 more hours remaining before the stock market closes. However, as of the time of this recording, U.S. natural gas is quoted at $15.64. And since trading started this morning, the stock is down another 71 cents. So here's the current candlestick for today, this red candlestick. Unfortunately, there were 2 green days heading into today's trading session. Also, okay, so it just filled one of my contracts. So again, this was an open order to close out the option trade. However, I did amend my order from $2. There, I was just liquidated at $2.88. So this was a very profitable trade. I am officially out of this trade. Quantity is 0. So again, the last recording, that was just an alarm to notify me that my limit order was met. So as I was saying, my initial limit order was sitting at $2.71, and I was able to amend it to $2.88, and that's what I just got closed out. And you can see that the premium is still increasing as UNG is dropping. It's now quoted at $2.92. So I'll provide a breakdown on the trade, but essentially, okay, so the market's going crazy right now. So that was just another alarm to notify me that I have another stock on my watch list that I need to review. But just to wrap up the UNG position, so my entry or my limit order was to close out the trades at the option premium valued at $2.88. Multiply that by the 100 shares each option contract is holding. That means each option contract I sold was at $288, and I had 5 of these contracts. So the net gross was $1,440. Subtract the initial capital to get into the trade, then the net profit is $1,206. So again, I'll provide a breakdown of that, and this was a very good trade to be in, and hopefully. And I'm glad I captured the entire opening and closing of this position. So until the next trade setup, I'll see you.